Yo,
Yo, what you saying, bro?
nah, man. How are you?
Not too bad, man. Not too bad.
Good. I've been doing a lot of back testing recently, and
Yeah, yeah,
because what did I do? I paid for like the monthly subscription thing, and I thought I might as well give it a try because doing forward testing can be quite slow and boring because you're just always waiting. So I thought, let me
yeah,
give it a
yeah.
try.
You talking
And
about the monthly subscription thing for TradingView?
yeah.
Yeah,
So I've been doing that, but I found like a couple things which it just always happens. So sometimes it would be that it might be a mad downtrend and it hasn't hit this price level for months, not even months, let's say weeks.
yeah.
And when I think okay, the downtrend's gonna carry on, I put maybe I do a short, I do a short position, but then it reverses and goes the complete direction. Um, But then when you zoom out on the actual trade, you can see for like around that level, around that price where it reversed, there was another like reverse as well. But how would you have known that if you didn't go that far back? Or would it have to be a case of you have to look at the whole picture?
So, what time frames are you trading on?
So I like to trade on 4 hour, 1 hour, and 15 minutes.
Okay. So, when you're drawing your levels, yeah,
Mm.
how how much would you say that you're looking at in terms of price action? Are you looking at like a few months, or are you looking like further, or are you looking at less time before you start drawing your levels?
Probably less time.
So like a month.
Maybe a month and a half.
Yeah, so I would say go back further.
Okay.
Yeah,
Yeah.
so I would say 3 to 6 months on a 4 hour. Yeah, and then you just start looking at like, because 3 to 6 months, where we December, that would take you back to June. So
Mm.
from June you would get like this level here, down here at 40K. You would get somewhere around um this level here at 40, like 44. This level here, where's that 53? Do you know what I'm saying?
Yeah.
So just go back a bit further and see what levels you see, I would say. Um and then just work from there, because what it most probably is your especially now where price is, you're you're looking at um you're finding sort of price action is trading back towards previous levels.
Yeah.
So um so yeah, if you're looking at like previous levels further back, then you have like an idea of where price could be trading to before it retraces it, before it makes a bounce, or there's some sort of reaction in the market.
Okay.
Yeah.
Yeah, I see what
So
you're saying.
in terms of um when you were doing your back testing, what was you looking at exactly? Bitcoin.
I was just really testing all of them. So I'd go into Bitcoin. I'll do that for maybe like half an hour and just see what I can do. See how many trades I could win, how many I lose, and the ones that I've lost and where I've gone wrong. And then I'd move on to like Ethereum, and then I'll do mostly the ones that have a lot of volume in it. So ADA, actually I've got it here. So I'll go into ADA, Matic. Um, I'll test some of the metaverse ones, but they're like They move crazy sometimes.
Yeah. So another thing, like when you're taking these trades, like are you using just one system, or are you just doing analysis and then seeing where it goes?
Doing analysis and then seeing where it goes.
Okay. Okay.
But then
Um
I have started to build a system of when this happens. So if it's like a downtrend, I'll wait for a reversal. I'll wait for an exhaust, and then if it doesn't pass the last, um, if it's like a downtrend, if it doesn't pass the last lower high, no lower low, then I know it's gonna carry on. So then I'll do it, and then I'll do a trade there.
yeah, okay. Okay. So yeah, when you're doing back testing, it definitely helps to have a system, just because you can really, what people do is when they do back testing, it's like they're taking a strategy and then seeing how effective that strategy is.
Mm,
So you kind of, you know what you're looking for, and you're looking um to see whether the things that you would use to trade um are are essentially could like consistent winners or have a good success rate.
yeah.
So yeah, okay, that's good then, bro.
Would you say I should find someone's system and then work off that, or start mine? Because if I was thinking about this earlier, if I wanted to start mine, I wouldn't know where to start.
Yeah, possibly, but really all a system is is I guess so. I guess so. But I would say back testing possibly, yeah. But I wouldn't say start off trading with someone else's system now.
Okay.
Yeah.
Yeah, I did have another question about EMAs. So
Yeah, yeah.
I've been testing out different EMAs, but
Yeah.
they seem to, I don't know, they don't seem to work in my favor. I don't know if I'm using them wrong or not. But so today I was testing out the 50 EMA, and
Yeah.
every time it would hit, every time it, like, if the price is above the 50 EMA, I'm like, okay, cool. Usually when it's above the 50 EMA, it would go up. But then when it's above the 50 EMA, and I'm like, okay, let me do a long, it always goes the opposite direction.
When it hits the 50 EMA and so you're looking for essentially for a bounce, and when it hits the 50 EMA, you go long. It it falls through the EMA. Is what you're saying?
Yeah. So what I'm saying is that, let's say the price is moving up, and it's just gone over the 50 EMA. When
Yeah.
it's gone over it, I'm like, okay, cool. This is a confirm. This is one of the confirmations saying you can put a trade in and you can go long for this.
Yeah.
So I'll do like a fake trade, and I'll put it as if I was to do it, and it'll just go the opposite direction. It'll go up a little bit, and then it'll just go the opposite direction.
Okay. I would say with that, um, it it most probably depends on time frame,
Mm.
um, time frame and sort of your range for your stop loss and all of that stuff. So how tight is your stop loss? What range and sort of where price is and what the EMA is actually doing. So as you can see, like on this 50 EMA on the 4 hour, you can see like price does hold it, but it trades through it, and it's not like a exact measure of support and resistance.
Yeah.
Yeah, but you can see that where it trades, it tends to follow it until it makes a complete break.
Mm.
If you can see that,
Yeah.
so I would say really an EMA is just more of a tool to sort of gauge direction instead of using it as like a support and resistance to say, okay, it's gone above it. So that's a signal to place a long.
Yeah.
You can get those good trade like see down here. You can get a good trade of just price getting above the 50 EMA, and that's a good long here from like what 42k all the way up to 65, 66 or 67k. So
Yeah.
you can get them, but if you look everywhere else, like for example up here, you can see price didn't stay above it long, and more is sort of ranging around the 50 EMA compared to starting a trend from around where around like instead of starting a trend from a break or a bounce above. So yeah, I would say it's a tool to sort of add to a system and sort of gauge what the market could be potentially doing. I would say the best thing to do is sort of look at market structure. I think I've like said it a few times, but
Yeah.
you want to see like a trend. You want to see a trend breaking essentially. So once this low is broken, then you know that there's a possibility of downside.
Yeah.
Once you get the swing failure here, yeah, and then a return to this level or another break of this level, you can then start thinking about going short on a retest of this level.
Yeah.
And then you've got that move there. So that's a longer term move. That's from that's a trade you're waiting for, let's say 28th of October to the 16th of November. So you're waiting 2-3 weeks for this trade. But once you get in that trade, you've got a move of, oh shit, that's not the one I wanted. You've got a move of from this level here to 40, let's say 45k, you've got a move of 25%. So depending on what leverage you use, if you're using 2x to 10x, that's a 50 to 250% move on futures.
Yeah.
And if you've got a grand worth of Bitcoin, that's a saving of £250 if you sold here and bought back here.
Yeah, no, I see what you're saying.
Yeah, so yeah, I would say it the way you trade on higher time frames compared to lower time frames, I feel like lower time frames you may need to use more technical analysis than you do on higher time frames. It's I would say it's partly the reason maybe why, apart from like not being able to sit at the computer all day and everything, using higher time frames and trading higher time frames is just a lot simpler because you got a lot of time to process things and get into trades, whereas
Yeah.
lower time frames there is a lot more noise and you're not necessarily knowing what's going to happen. But on the hourly you can see it, it's the higher time frames, but if you're looking at every individual candle, you might not necessarily see what a trend, like the trend that's forming. But once you sort of zoom out and get as much data as you can kind of see how the market is moving and sort of start looking at trends forming and uh and sort of precision entries and you know, building positions over long time frames, but being able to get in and out of the market. So I would say 4 hour, what would you say, 4 hour, 1 hour, and 30-minute charts?
15.
15 minute, 15, yeah.
Yeah.
So I would say that's a good mix to start out with, especially when you're learning, just because um you're not sitting too far back, you're not waiting too long, but sort of you're not sort of in the like really low time frames and getting chopped about all over the place.
Yeah.
You can start seeing these trends forming and moving, but you can also, you can also sort of look at these sort of ranging trades as well. But
Yeah.
another thing to think about as well is the market has phases. So, there's really two phases, and that's like trending and ranging. So a market can either be in an uptrend, a downtrend, or what they call consolidation.
Yeah.
So if I just zoom out, so even though it's a fairly long period on higher time frames, this is what they would call consolidation. I'm gonna take it from here. I'm just gonna look at this range here.
Yeah.
So so just disregarding all the highs and the lows around there, you can see that the market trended up. The market trended up. It came into this area where it began to range, and then it trended lower.
Yeah.
So really, when a market gets to a level, you then have to think about okay, it's made a high, it's coming down now. It's when it comes down, is it taking out lower? Is it taking out previous higher lows? And if it is, what is the next step that could happen? So, because a higher low being broken is a break of structure. So then you can then think about, are we getting a market reversal and things like that. And once you then get sort of if you're on a 4 hour, you can see that if we're just looking at this range of price here, you can see you get like a break of structure here. So the trend is broken here. It returns back above and makes a new high, but then we get another breakdown here, just around here at 50k. So if we get another breakdown after that, we would expect lower price, because once this sort of low, that once this low is broken, then we know that we're now in a downtrend. And any sort of returns to try and take out this high, we can then start looking at shorting to get in on the downtrend. This area of consolidation here is a bit more difficult to see, because it kind of winds down into it instead of playing a range as clearly as this one plays a range. So we can see that it makes a high. We come down into this level here. Price comes down into this level. I'm actually gonna just look at the wick just because it's the ultimate low. But yeah, come down into here. The previous lower high gets broken, and then we just sort of grind down back to the bottom of the range before making a new higher high. And once this higher high is made, either up here or once it's broken, you could say once it's broken, then we can start looking at getting long. And then if you're using on the 4 hour, if you're using the EMAs as well, maybe maybe if you were using like a 50 and a 20 or something like that, you would have started seeing possibly that a golden cross was happening somewhere around here, and you might have thought or just the market getting back above the 50 EMA and just placing longs there. But what you're looking at is the essentially the low was held. We got a previous break of structure here, and once we get up here and break the 50 EMA, then that's sort of a sign of possible buy-in about to commence. So you could have got in here, or once the uptrend is confirmed up here. But you're looking at just where a trend followed by a period of ranging or consolidation, and then looking for whether or not a reversal is happening, or if the trend is going to continue. And you usually just want to see if the trend is going to continue. You just want to see lows being held, and and lows being held and price trying to sort of break highs. And on the other side, if you think the downtrend is going to continue, you want to start seeing like the highs being guarded, and you know, finding resistance, and just attempts at breaking the lows, if that makes sense.
Yeah, no, that does. I think the main bit is for me is finding those levels and and having a look like that. What I tend to do a lot as well is when I'm like doing analysis, I tend to watch the chart on the hourly chart. Do you think I should be watching it on the 4 hour chart instead?
Not necessarily, because your the 4 hours like your highest time frame in it. So
Yeah.
um you could, but I think you also want to see what the market is doing on those lower time frames as well. So you do want to
Mm.
be getting in, and you do want to be looking at what is happening on the 15-minute and hourly charts, just because um you won't be really taking in how the market moves on like lower time frames, because you also want that experience as well. So um even though I trade mainly on, I'm looking at the daily, realistically like the daily and the 4 hour the most, I do sometimes come down into like the hourly and the minute charts, like 15-30 minute charts, because sometimes even 5 minutes, because I might want to take like a small trade, because I see an opportunity that could possibly be playing out on the higher time frames. But for me to actually nail the trade, I need to be on the lower time frames to nail it. So there's times where you kind of want to be looking at the lower time frames for just for your experience as a new trader. Like I said, there's a lot of noise and stuff on the um lower time frames, but seeing it and knowing what it looks like will help in your trading experience, if you get what I'm saying.
Yeah.
um let me let me just see if I can see anything just going down into, like, let's say the 15-minute.
I only use the 15-minute for for entries because, like you said, there's a lot of noise going on, and with and looking at the EMAs, they bounce in and out of it a lot, so it gets kind of confusing. Even though it's
Yeah,
a
yeah,
trade, it might bounce a lot within the EMA, so I only use it for entry.
yeah.
Um,
And that's literally because, like, even like the 50 EMA or the 200 EMA compared to 4 hour and daily or even the hourly, they're very close to price, because 215 minutes is what, like, I don't even know how many. It's like a day of
mm,
time,
yeah.
maybe. So so actually, no, is that a lie?
Wait, say that again. If
Two 200 the 200 EMA on a 15-minute chart
would
is
be
would be like 2000 minutes or something like that. 2000 or two 2000 3000 minutes, which is just a little bit more than a day.
yeah.
Yeah, so you're not looking at much more than a day of price on the 15 minutes with the EMA. So it's only taking into account the range, like the average of prices within a day, which isn't a lot in terms of when you're trying to when you're trying to sort of build a bias in which way to trade, um or or um or just sort of making any concrete analysis. So yeah,
So
I
would you
know
say
people do. I know people do trade on these levels, but I personally, I don't like it, just because I like to be patient and sort of watch things play out and be more confident in my trades before I take them.
would you say if I am going down to the 15-minute, I should get rid of the EMAs because it's just too much going on there.
Yeah, yeah. I feel like if you're trading on a 15 minutes, really, yeah, it should just be looking for entries, and your analysis for the most part is is being done on the 4 and 1 hour charts. Like, really, on the 15 minutes, for example, um, let's see.
Because you can see when price does go above, I mean not
Yeah,
all, but when it does go above the 50, I think the
yeah.
50
For,
EMA,
yeah,
there's
for example, yeah, let me just mark out this level. For example, yeah, you thought the market um was going to sell off from here. Yeah, let's say you saw the break, you saw the market structure break here, and you wanted to get in at a return of this level or somewhere around here, because if we're now in a downtrend, you expect these highs to hold, and you expect sort of the top of this range here to hold, and somewhere around here price is going to sell off. So on the 15-minute, the 15-minute is good for being able to sort of confirm this quicker than someone on an hourly would be able to do it. So let's just look at it here. So so um we've got it here, this high here, market structure is broken further here, so that's conversation, that's a confirmation of continued bearishness. We trend back up into this level, we then get, really, this is sort of the noise I'll be looking at, because you're sort of thinking, okay, we're selling off, But then a newer high has been made, so you might be thinking we could possibly go higher before we sell off more. But if you're looking at these levels here, sort of selling off this previous level of support. It's a bit more of a range there, a bit more of a zone. Let me just get the rectangle out again. So we're kind of selling off this area here. Just gonna make that gray. Yeah, and so you're coming into this level, you're starting to sell off. You see here on the 15-minute, we get a higher high, but we come down, we bounce off the 50 EMA and break it and drop heavily. So you could either say get in on the break of this level or wait for a turn and get in. And we just got the bottom of this range here, the bottom sort of like this support level here. Price came back down into it here, or this resistance level here, whichever one you want to call it, but it's acted as support somewhere around here, around the 50 EMA. It's acted as resistance there. But yeah, you could just set an order somewhere around here to sort of trade, and then now you're just waiting. Now you're just waiting for the move lower. You can see here that this level here was a very significant level of selling. So I would say a lot of people were sort of, as price was coming back into this level, was just selling. You could have done the same. You could have sort of split up your risk and made maybe 3 or 4 trades. If you thought that was a level that this was gonna happen at. But what I would have done is I would have got in. I would have set orders up here on this low. Once this level is broken, I would have entered somewhere around here. Stop loss, I would have put my stop loss, because I'm looking for the longer time frame, I would have set it at 5%, that initial one, somewhere up here. And then any returns to this level, I would have had orders just to add a bit more and set them at maybe 2 or 3%. So either set an order here or set an order up here, depending on, I would have set them here at price, at my original entry. So 3% and 2% is here, somewhere here. So that's really how I would have traded that. Initial entry, small but largest risk in terms of percentage, and then just add a bit more with larger size but higher but lower sort of risk percentages, and then just waited for this move to play out. So you can see this better on the 15-minute in terms of precision and what levels are being sort of looked at. Whereas on the 1 hourly or even the 15-minute, all you're just seeing is really wicks. You can see it here on the hourly. It's being traded quite well on the hourly. That would have been your perfect sort of trade there, even though it does come back up to it. Could have traded that, taken profit somewhere down here, and then got back in. On the 4 hourly, I would say that level looks a bit more blurry, possibly. Yeah. So although you can see it, it's not as clear as it is on a 15-minute. So all the time frames and everything, they have their pros and cons. Lower is usually precision, and but you get that noise and the swings, and the higher time frame is just more easy to spot trends and get into trends, but you usually need more risk if you're entering trades on these time levels. You need larger stop losses, and things like that. If your support and resistance levels on these on the higher time frames, they tend to get like strong strong reactions when price comes into it. So you usually have to set them as your profit targets, just because when price gets into them, you could get a bounce and you're losing a lot of the profit that you might have gained on your current trade. So yeah. Does that make sense?
Yeah, no, that makes perfect sense.
Yeah.
Yeah, yeah, it does.
Cool.
Um,
Anything else, bro?
yeah, wicks. I feel like I get wicked out a lot. Like when I do
Okay.
a trade, the direction it goes in is correct, but whenever I put the trade in, literally the candle after just completely wicks me out, and I'm like, oh, great.
As in for your stop loss.
Yeah, yeah, yeah.
Um, I think that's a 15-minute thing, to be completely honest with you, bro. It also depends on the market you're trading. Um, but it could literally just be that it happens. You do just get random moves on lower time frames. For example, if you shorted here, if you longed here, like for example, this trade I done here, you can see what the market is doing. Yeah, I could see what the market is doing, but I think my initial entry was somewhere here. Once it got back above and came back and got stopped out once it made this bounce. Um, and this I was actually trading on the 5 minute. I so so just looking at this on the 5 minute, um, I I could see that 48K was being used as support, even though it was trading through it. It was sort of coming back above, and once these highs got price got above these highs, I thought, yeah, that's my entry. I wasn't necessarily expecting price to come back down here, and it just about took me out. So I could have either had my stop a little bit lower. I only wanted to risk 1% on this trade. But what I did is I doubled my position at this level and just added another 1%. It was actually a little bit less, I think. My stop is at 48,100. So somewhere around here, about 0.5%, just a bit more, 0.2%. And yeah, and luckily for me, I was right, and the market then continued to move higher. So I would say that it's a lower time frame thing more than anything. You kind of have to with the lower time frames, because of the way the market can swing and move, you kind of need to sometimes either be persistent or just split up your risk and maybe instead of having one trade of $100, you're doing 3 trades of 30 and placing them in a range of prices.
Yeah, I get what you're saying.
Yeah,
Yeah.
cool.
Seems to be
Yeah,
quiet.
I know you wanted to go over candlestick charts. I'm just gonna put this. You might need to make an account on this website. But I'm gonna go over them today anyway.
Yeah.
I don't know how long we've been in this course so far, but it's gonna be a long one. So let me just put this in here. Hello, little late to see the. I'm gonna do the analysis in a bit, Al. Just give me like 10, 15 minutes. I want to quickly go over candlesticks. But yeah, the candlesticks, all they are is just a representation of the ranges of price that has happened within a given time period. So every one of these 5-minute charts, let's say any one of these 5-minute candles, sorry, let's say this really bearish one right here. Yeah. We can see it just gives you the range of prices for that 5 minutes. So we have up at the top the open. If there is any wick on that candle, there isn't much of a wick, but we can see the open at the start of the body up here. You can have the high here, the low here, and then the close just at the bottom of the body. So with every candle, that's what you need to look at. You need to look at the ranges of price within that candle and the open and close. If you go on to just a random one, but the bars candles, it's harder to see, but you get that description a lot more easy compared to the candlestick. So gives you the high and the low, but then it gives you either a left for the open or right for the close line. So if you're ever looking at sort of more price action compared to technical analysis, looking at ranges of prices and trading around ranges of prices, the bars charts might be better suited. But anyway, so the formation of these candles can give you a sort of representation of what buyers and sellers are doing in the market. So the main one people look at are dojis, which is sort of this one here. And they usually come around reversals, and at the bottom of like power of 3 formations. Power of 3 is basically a low, a candle making a low, and then 2 candles either side of it, or 5 candles either side of it, with higher lows than their previous candles. So even though you haven't got this candle with a higher low, this is kind of like more of a power of 3 than a power of 5, but it is kind of a power of 5. This one's a bit buggy. So yeah, dojis are just candles of exhaustion or candles with small bodies. So you can see that prices come down into this level. This is a 5 minute. So let not looking at it too much, but we can see that it's had a bounce. So price comes down, sells into this level, buyers come in and they push price back up and make the high, and then sellers come back and it closes basically flat on the open. We can see a more textbook one here. Similar things happened. Either price has been pushed up, pushed back down, and then buyers and sellers have closed price around the open. And it just shows you, I would say, not exhaustion, more sort of indecision. Prices come into a level which is heavily defended. Buyers, you can see there's a decent level of support there. I would expect it to be more of a zone, but you can see that just, you know, there is trading happening around there. It's a bit of a wonky line, but you get the picture. So yeah, that's the main candlestick you want to look out for, is the doji, because on the higher time frames they're more significant. If we get a doji on the 4 hour, I would expect that there is a, where were you in November? Where's price? How have I lost price? Okay, there we go. So if we go into the 4 hour and just look at where dojis are forming, we've got one here, before a 6 or 7% move. We've got, I don't want to look at these ones here because nothing's played out yet, but I'm expecting price to be going towards 53, 54K from here. But kind of got one here. After that, we had a 6 or 7% move. This one isn't really a doji, but it is a candle of indecision. You can see that the market traded up, traded down, and it's more of what they call a spinning top, instead of like a proper doji, but it is still a candle of indecision. You have a small body and just wicks either side of it. This one's more of a doji, but I believe this is more of an area where price is getting down into this level. Seller or buyers were getting exhausted, and then you just get the level broken and buyers giving up. Other dojis. Let's look at where have we got? We've got the 70s up here, 70Ks. So on a 4 hour, we've got this one here before the swing down. This is more of an indecision candle more than doji, but similar thing. You're just looking for these levels where exhaustion is happening. You want to see, more than anything, you want to see sort of getting into levels where there could be a reaction, you wanna see wicking happening, because then you know that a reaction, either a break up or a breakdown is happening. So
So just quickly, if you were to see those three candles just wick out and just doing a sort of indecision, would you then have to wait for the candle after that to see the movement or where the market might go?
I would personally be looking like for here, yeah, for this trade here, yeah, if I was to take this short, I would be looking, I would be looking at this level breaking, somewhere around here breaking,
Is that
before I was to
before we
get
get?
in. Yeah,
Okay.
before I was to get in. So I wouldn't necessarily get in on that, because that doesn't give me any confirmation of what the market is doing. Like I think I said earlier that we got the break of market structure somewhere here, then we got the high, and then we got the swing failure. So I would be looking at sort of a confirmation. So this is the confirmation that that we're getting a downtrend from these highs, yeah, but we still have a higher time frame or larger trend going. So um this area, a break of this, I can then look to trade down to here. So from 60, around 63k to 60, 59, 60k, I can then look at that to start placing that. I could just jump in somewhere in this 4 hour on the break of this 63k level, and play my risk, maybe 3 to 5%, and then just try and play this trade. Once this then breaks this level here, then you can start looking at further downside. But going back to the candles, you're looking for sort of these exhaustion candles, or more wicking, I would say, more than anything. So we got down this support level here. If we just look at this low, even though it's a break of structure, you can see that markets come down into this. We got a sort of a candle here where the market's tried to push up. It's been sold back down. We've got the market trying to sell through this level. It's been pushed back up. Similar thing happening on this, and then it starts getting more balanced. Prices moving up. We get a spinning top, a small spinning top, for an impulsive move higher. So let's look at that on the 1 hourly. If I just highlight this, because I'll lose it otherwise. So go down into the 1 hourly. Just where are we? December. So for this move, you can see the high of the range is somewhere around here. If we either use the bodies or sort of where price is reacting to more, it's somewhere around there. See, you got all the ends of the wicks of the candles sort of selling off from that level there. Bodies are holding below it here, even though we're wicking through it, but you know, that seems to be the level from about here, from about this here, and then everything around it is sort of just confirming that. So we've come down to here, we've made this sort of indecision candle here where price come down into this level, being brought back up, sellers have made it close flat, and then we get this. I think this is a candle pattern, these two candles here, I'm not too sure. Let me just have a quick look because I'm on the website right now. I'm just going to see if I can find if that's an actual candlestick pattern. So dual candlestick patterns, and then we have okay, no, I don't think it is. Let me just check triple, because it might be that doji as well might be included. Okay, no, it's not. Okay, so this necessarily is not telling you anything, but we've got price here confirming the high of this range, but all of this wicking is sort of giving you a idea that the market is in an area where a I wouldn't say intense battle, but an area where direction is sort of being battled over, and then we finally get a breakthrough. So you could essentially trade the break. On the 1 hourly, you might be looking for price to get back above the 50 EMA, and possibly a return into this level. I don't know how much of a stop loss you would have needed to account for these wicks, but you definitely would want it below the low. So you definitely want it below this low, and I would say the actual support or resistance level. So let's say 3%. I most probably would have gone with 5 if I took this trade. I don't know if I did, but let's say you want to get in on a return to the highs of this level, the resistance becoming support, and you get in there. So you're looking for these areas of exhaustion, wicks doing things like this within a range. That's typical lower time frame consolidation. Let's see if we can find any other areas like that. If we look here, it's not as big of a move as that one, but I think we've got something similar over here. We've got consolidation before price moves back down here. You can see that sort of wicking around here. And then you've got another return before it breaks through. Not as much wicking, but I would say this is more of a reversal consolidation. This is more of a trend continuation consolidation. So we've got price. Let's do the reversal one first. So got the trend up, prices hit a high, we've got a swing failure, and then market structure break, return to the previous support and a sell down. That's your trade. Once we see that these lows are holding, hopefully that would have been your profit target, somewhere around there, the lows here. But when you see this, so this wick being guarded, once you see that, then that's sort of your signal to get out. So then we've got the continuation one here. So we've got the high being broken, then we've got this low being held, price pumps up from there. You want to either get in on the return to that level or break back above these highs. So yeah, I would say mainly look for areas where price is coming into a level, and then see what on lower time frames, like all the wicking and indecision in the market. A couple of, let's see if we can find some candlestick patterns shown on this website. So I don't know what link I sent you guys, but on this website it's just the education center. Yeah. So if it doesn't take, because I think you need an account, if it doesn't take you straight to the page, then you just make an account and everything is under, all the technical analysis stuff that you'll need is under education. So you just it's forex education, but technical analysis is technical analysis. So yeah, just go through the education, and then they have like a school system sort of technical analysis education course there. So tweezer bottom. Yeah, so these are dual candlesticks we're looking for. Bearish engulfing is my favorite one. So bearish engulfing is a 2 candlestick pattern, and you're basically looking for a candle to be fully engulfed by the previous candle. No, sorry, fully engulfed by the candle after it. So it usually happens on moves higher, or like at the highs and lows of ranges. So I can't see if the low. Okay, so this right here is a typical bearish engulfing. This right here. Oh, why is my arrow doing that? Let's change it to the green one. So this is a typical bearish engulfing here. You can see we got a small range candle here. The low has been taken out by this bullish candle, and then the high has been taken out, and we've just made a large candle to sort of confirm this reversal in a sense. I don't know what you would have got from there, but you can see it's moved up higher from there. So I say that's a bullish engulfing. This one's not necessarily, because I don't think the low is, I don't think the low has been taken out. But if you see this, I mean, if you see this in a chart, I wouldn't necessarily say not to buy. You just have to be careful of where you're getting into, and where the market could possibly return to if it's on lower time frames. On higher time frames, you might be a bit more lucky with just jumping in on that, seeing something like that. Bearish now. Let's look for a bearish one. Here's a decent bearish one. We've got reversal, price coming back into this 50 EMA, the high being taken out, and then we get the large candle lower. Where do we go from there? Decent move down. I don't know if we go any lower from there. Well, we were in October, so price came back and took out that high, I think. No, it was guarded. So I mean, if you did get in there, you could have possibly held until when? Until somewhere around here, I think. Yeah. So yeah, you could have either held all the way to here, or you could have added more, or taken profit somewhere down here, got it back in on a return. But yeah, that's the engulfing candles. Tweezer bottoms and tweezer tops. I think they're going to be a bit harder to find, but it's basically two candles that have sort of made like a double top, and one is bullish, one is bearish. So one is, say, a green candle, the other one is a red. I know this is going to be harder to find. This is what it would look like,
Just
something like this.
quickly, sorry.
Yeah.
Does the the color of the actual does the color of the actual candle matter? So if you get like a hammer, um, but it's red, does that mean it's going up or down?
So that depends on what the candlestick means. So in terms of like the pattern, so I think a hammer is part of like a 2 or 3 candlestick pattern. So it depends on the candles around it, and not necessarily the color. You can have your candles any color, but the whether it's a bullish or bearish candle. So that would be like the 2 or 3 factors that decide whether or not it's a bearish pattern or bullish pattern. The candles around it, and if price closes above the opening or below the opening. So yeah, the tweezer top or bottom looks something like this, but the tweezer bottom would have the wicks coming out the bottom here, and tweezer tops have something like this. If you see this, it's supposed to be like a reversal. I don't usually, I wouldn't necessarily use this. This bearish engulfing is the main one I use. Triple the hammer. Let's see if we can find a hammer candlestick pattern. Okay, so hammers are more sort of reversal candles. So it's not necessarily a triple a triple candlestick pattern, but the main one you're going to use it for is the power of three or reversal reversals. So this one here, I can see this one here, but you know that one, you know, if you're back testing there, that's not a good trade there. So let's see. Okay, this one here, this is a decent one. It's not the best. You would want a smaller body, but it works. This one here, you have the low being made, two higher lows are either side of it, reversal, that's a reversal pattern, power of three. Or like I said before, power of five with the two either side of it, with higher lows as well. So power of three or power of five, if you see a power of five, I would guess it would give you more confidence than the power of three. But yeah, that is the main hammer, candlestick pattern that I use. Can we find one for bearish? Not necessarily, but yeah. What else have we got? Yeah, I'm not gonna lie. The main candlesticks I look for, like I said before, these consolidation areas with a lot of wicking happening, bearish engulfings and power three. Power three is mainly a daily play more than anything. A power three on a daily is fairly powerful. For example, there, I don't know where that takes you to, not that far, but yeah. If you preempted a power three happening here on the 50, and got in on open, you've got a trade from 51k to 60, around 65k. Power three here, not the best. If you were preempting it and got in on the open, 50k to around 58k, 59. Power three on the downside, a lot better. If you got in on the confirmation, so maybe on the open of this first bearish candle, you've got a trade down from 63k to 48k. If you held, you got a trade up to down to 30k. So yeah, that's a crazy trade. 63 to 48, 63 to 63 to 48. I think that's another, is that another power 3 somewhere there? It's not the best, but yeah, if you take this power 3 as sort of a swing failure for this move, yeah, I think I got in May from somewhere around here. I can't remember exactly which candle it is. No, it was this one. It was the 11th. It was 11th, and it was because of this power of 3. This power 3, I think market structure break, and the swing failure. Yeah, another power 3 there, or power 5, one there. You can see they tend to have decent moves on higher time frames. So yeah, that's something to look out for. I think even on these sort of weird areas here where price is not necessarily just with large volume just pushing up, you get power 3s, and the power 3s tend to hold price for the trend continuation. See here, we got one. Where's the next one? Next one is here. The market structure broke there, so ignore that. But yeah, within trends, when you get just small bounces in trends, look for power 3s on the daily. You might be able to get an entry just off that. There's not much to really say on candlesticks. In that baby pip section, there's a cheat sheet of all the candlestick patterns as well, so you can go through that and see if you spot them. But I mean, for me, it's very hard to see. I'm really just looking for price getting into a level and then getting these wicks to show a reaction. Obviously, power 3s for reversals, and bearish engulfings are my main ones. Okay, so let's get into some analysis. I don't know how long this call's been so far, but I know it's been long. I think I started, when did I start? At 8. Yeah, so it's been like an hour and 20 minutes. That's not too bad, to be fair. Let's do like half an hour of analysis. Any charts you want done? Is it who's in the call? Okay, it's only Al. Okay, cool. Any charts you want me to do, Al? Let me know. Start off with Bitcoin. So right now I'm expecting Bitcoin to go to 54k. Let me just get out my actual chart. I don't need to look at this anymore. Where are we? Oh, don't tell me I erased my actual chart. What the hell? Flip. Okay. That's annoying. Let's set it up quickly again. It shouldn't take too long. So take this level here. This level, where is it? 48k. It's 48k, 53k, 48k, and 53k is the only ones I want right now. That will do as well. That's actually perfect, or nearabouts. So this is a weekly level up here. This one is more of a daily. Give that daily, this one weekly. And I'm gonna make this 43k. Flip. $43,000, 48,000, 53,000, 60,000. Okay, cool. In the zones, and we're done. Okay. Oh shit. Cool. That will do for now. But yeah, on higher time frames, I do expect this to go lower. We have found support around 43k, and price has got back above 48k, and holding quite nicely. I think we have a higher time frame trend that's being sort of held. I don't know where it starts, maybe somewhere down here. Not the best. Where does it start? Somewhere here. Yeah, but there's some sort of trend here that's being held. Prices capping the price. Prices or the trend line is holding, capping the downside of price. So we can look at that as possibly being held and us going back up towards 60k, 65k. Let's just mark these highs up here. Let's take the all-time high. See price getting back up to there, possibly from these lows. If we just get a Fibonacci tool here and just see from this range low to from the swing high to the swing low, we've got a retracement down into the 061.8 and price holding above the 50% fib. So I mean, even though I still feel a bit bearish, for me, this is like the perfect retracement. We've got it into a key weekly level between the 61, the 0.618 and the 0.702 fibs, and a price holding above the 0.5 fib level. This is not textbook, because I don't know if it's textbook, but this is kind of what I look for when I use the fib. 50 EMA is being respected as well. We've got the trend line. This is like typical uptrend, bullish trend market structure that I would look for a turn. So I wouldn't say I'm all the way bullish right now. We might be able to trade a bit lower before we confirm this higher, but in terms of further downside, we might not actually be in trouble here as much as I first thought. It depends on what happens with everything else in terms of global economics. But yeah, right now, higher time frames, we're looking bullish. Let's get rid of the fib, go down into the daily. This right here is what they call or what's happening. So if this orange line, which is the 50 EMA, and this red line is the 200 EMA, if the 50 EMA gets back down here, it's what they call a death cross, which is not good. It's usually signals further downside, as when it goes above the 200 EMA, it's called the golden cross, and it usually signals further upside. So even though a lot of the upside has happened after we get the cross, or before we get the cross, sorry, once it starts contracting and looks like it's about to happen, you can sort of take that as a signal to sort of say price is moving higher. What I look for is a break of the 50 EMA and a push through the 200 EMA fairly soon after the 50 EMA is closed, and then I would like to sort of get back in on the 200 EMA if it retests it. But yeah, that's what I look for. If the 50 breaks on a daily, I'm usually looking for a trade down to the 200 EMA, especially if we've got a broken market structure and price not looking very strong. So yeah, it's broken it here. So as you see the 50 EMA is broken. Price has come down to the 200 EMA, and we've got price at 200 EMA currently just testing it on the downside. So we could be in possibly for a trade to the low 40Ks, possibly. duh, 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 duh. Although saying that we've got the break, we might actually just push up a bit more before actually confirming this break and moving lower. As I've said, we've got this higher time frame trend. We are in a very, very sticky situation right now. In terms of direction, I wouldn't say there's any sort of like concrete direction from these levels, I would say. And there's a reason for that as well if we look at volume. So I don't know how far it goes back that this is the volume point of control. It's not that far back, it's just from this swing, isn't it? Yeah, so from this swing high to this swing low, this 48K is the mean of sort of the mean or the volume point of control, which means it's the highest traded area in terms of volume. And essentially that just means that price is sort of attracted to this level. What you see is where the highest amount of volume is, you tend to get sort of areas where price sort of trades around the most. And the lower volumes tend to be like the extremes of ranges. So you have here is the top, down here where there's low volume down here, that's the low. And then we've got somewhere around here, you can see that this area made a high before, and yeah, not much is going on here. It's in between two ranges really, so not much is going on. But yeah, if you just look at the sort of two extremes of this area, you can see the sort of extremes are where the lowest is, and the prices that are traded the most, namely this 48K, is where you get the highest volume of all. So yeah, this area, I'm expecting price to trade around this area between 53 and 43K. I'm expecting this to be a range going forward. We might actually see price in between this range, sort of the midpoint, which is about 50K, 50, 5,500. We might see sort of price sort of range around here, and we've got 48K there and 43K. So 45, somewhere around 45 and a half K. Let's just put it there. Yeah, so somewhere around here, I would expect price to range as it's ranging around this 48K and sort of being played about with volume, depending on whether or not this trend is going to hold. So yeah, I said 53 to 54K earlier. I'm just expecting this trend to be continued, but for that trend to be continued, I need a return to this support that's now turned resistance. So here it was resistance, we broke through it. This zone was used as support, come down, support before breaking through and becoming resistance. So I would expect price to either come back up to here or it could just break from here really. We've returned back to this range. It's confirmed that high there. This is the daily as well, so that high is a bit more what's it called, a bit more important than, let's say, 1 and a 4 hour or a 1 hour. But yeah, so what I was looking for is just a return back here, a drop back down here, and then price to continue down. I'm not too sure if that's gonna happen. It could. What we're seeing right now is price get back to the 200 EMA. It did get back above it. I don't know how if you're in the trade log, but I did open a trade from, it was around 48. It was originally like 49, but it came back down to 48, 48.4 or 48.3, and I got stopped out. I entered back in at 48.5, and trying to get to 51.5k. But I took half of my profits at this somewhere around here just because of this 200 EMA, and obviously on the daily, my longer term, longer term for what we're currently looking at. But I'm expecting price to go down here because of what is happening with the potential of the death cross, 200 hitting his head on here, and for me to sort of start being more confident on bullishness, I need price to go back above here and start trading back above. So we found this level. I just need another level to confirm, or give me more confidence that we can go higher from here. People will tell you that a death cross is not necessarily important in crypto, and that's literally because by the time the cross happens, the move has been missed. You're not looking for the cross, you're looking for the possibility of the cross, I would say. 50 EMA broken, 200 EMA broken, possibility for that just opens up the possibility for the 40Ks to be open, in my personal opinion. Same thing happened in May, June. Although once the 50, once the 200 EMA was broken, you kind of missed most of it. You still got 42K to 30K, still 10K there, roughly what, 25% from 40 to 30K, something like that. But a break of the 50 EMA on this trend is a lot more serious than where we are now on a break of this. You can see price more recently has been trading more around it compared to where here it was a serious sort of support, dynamic support level for Bitcoin on this pump higher. So yeah, 50 EMA hasn't really been holding Bitcoin price as it did earlier in the year. So yeah, a break of the 200 EMA still could give us a decent move back down to the well, I'd say 43K first. Let's say that these buyers, this was just orders being held at this level, and now we might get a possibility to trade back into these low 40Ks and gain some more or fresh buying, fresh demand. So that's Bitcoin. 4 hourly. Let's go into the 1 hourly because I'm currently in a trade. So I'm in from 48.5. We've got price on the 1 hourly. We can see there is the possibility of a golden cross. It's kind of what I am playing. It's potentially what I'm playing is a move back up to these highs, essentially, off the back of this potential 50 this potential golden cross. But obviously we have the daily capping price, we have this level capping price, and this is basically the midpoint of 48, or it should be a bit higher really. No, sorry, it should be a bit lower, somewhere around there. Yeah, this is basically the midpoint of 48 and 53k. So yes, we may sell off from here. Obviously this golden cross has less significant the lower the time frame, but it still can be traded on the lower time frames. What we're really looking at is the 200 EMA being broken and tested on the high, on the upside. That's the main thing we're looking at. The 50 EMA, when the range between the two has contracted, once the 50 EMA breaks, you're kind of preempting a break of the 200 EMA, and once that breaks, then the 200 EMA is a greater sort of signal of potential reversal, because it doesn't break often. 200 hours is what, 5 days, 4 or 5 days. Where we are the 12th roughly, the 6th is here, the first is here. Price was, so the first of December, price was trading around the 200 EMA, and it finally got back below and was below it for 12 days before it got back above it. So we could see another 12 days above it before we get back below it. So we could even trade back up into the high 58s if we're just looking at a possible trend here. We have 48k holding. We've got these highs that need to be taken, 53k. If we're looking at price staying above the 200 EMA, that could take us up into the 50, up into the 53Ks, and start looking at taking these highs around here, trading around this support level. If we look at the last thing I'm going to look at on Bitcoin, if we look at, we've got, what do I want to look at? I don't know if I want to take price from this. Let's look at this and then I'll look at the actual thing. So we've got price making the low, made the high, come back down to the 50 EMA, all which is around sort of this 48k support level, bounced off, and now we are trading above the 200 EMA. If we see in terms of extensions where this could possibly trade to. So we just flip the fib tool, put it back at the high, put this back at the low, which is somewhere here. So we're now looking at a possibility to trade back to around 40k, possibly 58k, and possibly higher if you look at higher targets. But yeah, I don't really want to be looking too high right now. I would say get back above 53k and reassess. Okay, ETH, everything's looking a bit green right now, which is nice. BAT is back above 120. Should have bought it when I saw it at 115 earlier today, but doesn't matter. ETH, I guess it would be a similar story. Right now, it's hitting its head on the 200 EMA. Let's go up into the daily. Yeah, so ETH is just nicely playing this channel. Obviously, we got the break below, holding this support level, and this nice trend from like the 1800s. So we could possibly be in return up to these levels, but right now 50 EMA is capping price. So really we need to see a break above that to confirm that. It depends really what the market is doing. XRP looks very weak without doing too much analysis. Break of the trend here, retesting it to the downside. I've heard people say it could go to 50k. Not too sure about not 50k, 50 cents. Not too sure about that, but it's very much a possibility. Even if we're looking at super long time frames, we could even make it back down. We could legit be making it back down into the 50s. It's crazy. XRP is actually crazy about how everything else is moving and it's kind of just sitting still. Really is, I would say, sad to see, but yeah, really shouldn't be invested in, I can't lie. The BNB, they expect a similar thing is playing out here. Yeah, I would expect all of the like top 5 or 6 to be in similar predicaments. I would say Cardano is most probably the worst looking. We got the break below the rug pull level, and it looks like we're just retesting the 150 level right now, possibly go back to the $1. But I can't lie, a lot of things look, if you're looking at the rate of selling Let's forget about Bitcoin, ETH. Let's forget about the top three, because these three are, compared to all the other altcoins, they're different in the sense that Binance is the largest exchange. They don't need to sell their supply because they are making money from trading. There's no need for them to sell. The only people that are going to be selling is retail, people that have made money from meme coins on the BSC network, um, and yeah, people that have made their profits from that and want to be cashing out because of bear market, and but a lot of that value is being put into projects and not necessarily being taken out right now. So its price compared to the other altcoins is fairly stable. Same with ETH. There's a lot of value locked in ETH and a lot of projects being developed on there. So if we are looking at the starts of a bull market, those top three are not necessarily going to be selling off as hard as everything else. But we see XRP is sold off hard. XLM has sold off fairly hard. If we're looking at from 44k to 20, I don't know how much that is. That's much, like 20%, maybe a bit more. Okay, we're looking at more 40%. So yeah, I don't want to sound like too much of a pessimist, but we could just be seeing a lot of money being taken out of smaller smaller projects first before we get a larger sell-off on the things like Bitcoin and ETH, because obviously the same way as money trickles down in a bull market from Bitcoin into the high caps and then the low caps, the same thing happens on the reverse as we're going into a bear market. It trades from the low caps back into the high caps, back into Bitcoin, which is the safest, and then depending on market sentiment, we just get the continued decline, slower decline on Bitcoin, faster decline on everything else. Serum not looking too good. TLM back to below what I bought in at. I'm still confident on this though. High, long term. So I might actually get in some more here. One, I am DCAing into it. I can't lie, guys. I'm in. I like this. I like Harmony a lot. So yeah, this is what I'm buying now. I am expecting at least $1 on this at least some point. If not, if this is the end of the bull run and it takes another 4 years, then yeah, I'm expecting $1 in the next 4 years. So yeah, 4 years, 4x a year. I'll take that. We have Solana. Solana, I think, hit 150, didn't it? 160, somewhere around 165. Yeah, so I think I actually did short it from like 200, somewhere around 200, I think, somewhere from when this broke. But I didn't, or it was the trend line that broke, one of these two, but I didn't actually hold to 65. I think I got out around 180. So yeah, could possibly see a return back above or somewhere around this level before confirming lower and going down. That's the bearish scenario. The bullish scenario just looks a bit similar at the start. We get back above, trade around here, break that, confirm this previous level as support, and then we go up from there. Doge, similar thing. Yeah, I can't lie. The rate that everything's selling off at is not giving me confidence in a continued bearish market here. This is the most surprising, because obviously we were trying to buy it up here. We were trying to buy it down here. Once it finally went, it did like a nice 100%, and now it's back down to its original level. It might just stay above here. But yeah, I'm actively in on this. It's still early in TLM's journey, and the game plays all right. It's a bit there's not much to do in it, but it prints money. So I just think of it as like a browser miner in a sense. Although right now it's not basically making me nothing. What else have we got? Have we got any requests in the chat for charts actually? No? Okay, I think I'm gonna end it there then. Yeah, oh, no one's still here. Mad. Alright. If you spent these 2 hours here listening to this, I appreciate you. If you're watching this on YouTube and you stayed the 2 hours, I appreciate you. Stay tuned. Should be every Wednesday and Sunday that we do a call. So yeah, we'll be back. I'm actually going to do, on my channel, I'm gonna do a technical analysis series short course. Things I'm teaching in the group, I will put into a video series and just post on my channel. So yeah, that should be coming soon. Yeah, thank you. Like, subscribe, do all of that. Peace out.